The new revenue recognition standard is a joint standard issued by the FASB and the IASB, and it's going to replace all existing US GAAP and IFRS literature on revenue recognition. This is probably the biggest accounting change we've had in over a decade. It's going to impact all companies to some degree. The tech industry is going to be particularly heavily impacted, in particular those subsectors that have specialized guidance such as software. The standard's going to be effective for calendar year ends, January 1, 2017, and for fiscal year ends, it'll be their fiscal 18 year. It matters first of all because it's a compliance and accounting issue. People have to get the financial statements right, but it's much broader than that. Revenue recognition is an area that impacts business processes and systems and their operating model, and they're going to have to think through those broader business impacts as well as the accounting change. So I often get asked, how hard can it be? It's just an accounting standard. And I'd say the accounting itself is complex. It's an area that's very complicated, so that's a challenge for the finance people. But revenue recognition is an area that affects business processes, product offerings, sales compensation. And so there's much broader business and operating impacts for companies to think about, as well as thinking about what's the systems impact of this accounting standard going to be. Many technology companies have already realized that this is going to be a pervasive change for them, significant shifts over the next few years because of the regulatory change, but also perhaps because of business model changes they're already going through. PwC is ready to help our clients as they work through their implementation of the new standard today.